PMFers, who's got that product market fit? Boop, 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 ba-doo. I'm here with Griff Green. Griff, how you doing? How you living?
Living the dream, man. Living the dream. It's good to see you, Austin.
Hell yeah. Thank you for coming on PMFers. Before we even talk about blockchain, how did you get started building or get started making things or doing things that people wanted to use? Like, did you build products before, or was your product building only an here on the chain kind of experience?
I am a fake it till you make it kind of product builder. I mean, I just got lucky with the DAO back in the day, right? As my first project. And that definitely had product market fit early on, as it raised 14% of all Ethereum in existence, due to almost like a mispriced risk, apparently. um, and then, and so because of that notoriety, I kind of fell into building products. And I'm not a developer by training. I do have the first master's degree, first degree ever in digital currencies, but
Hey.
that's not really. It was more of a finance degree than. I mean, I literally collected my diploma a week after the DAO was hacked, so it's not like the degree really got me anything.
So the money was still locked up and you were still facilitating the white hat hack at the time, right? It was locked for a
Exactly.
period. Yeah.
Yeah, I mean that's why the DAO hack was able to be reversed by a hard fork. That all the money in the DAO that was hacked was locked for 35 days. So it wasn't a rollback, as people say. It was just an irregular state transition where Ether was locked in all these contracts, and all the nodes could upgrade to just take it.
And if it would have just proliferated across the internet in a million places, they wouldn't have been able to do that. They would have had to do like a full-on rollback of things, and it wouldn't have been a different kind of thing, not just a state transition where you can say there's a chunk of money still right here. We can flip some bits on that. Okay, interesting.
Exactly. I mean, that's why Bybit, the hack can't be reversed. Like, even if we wanted to, it's like you can't just like somehow track all this Ether and be like, this person, this Ether
without completely
was bad
forking the
Ether.
chain. Yeah.
I don't even think
Okay.
it would basically just be impossible. I think at this point, those kind of things, unless the Ether is locked, and even tokens and stuff, like it would be really impossible.
It would be a mess. Yeah. So is that your product market fit? Do you have other claims to fame or product market fit on Ethereum or on chain?
I always have a lot in cooking.
That's right.
But I would say that the DAO is definitely the main product market fit that I've seen as far as like user drop off rate. I mean, we had a real big drop off rate.
Real drop off.
It was a real spike down there, but
yeah.
We had really strong adoption and usage. 14% of all Ether in existence were in those smart contracts. But I wouldn't say Giveth, or I've had a lot of products since then that absolutely did
let's
not
talk about
reach
those
product market fit.
Yeah. Let's talk about some of those though along the way. So Giveth, I see unicorn.
Yeah, Giveth. Yep. So these are my and Pairwise. I'm even wearing the shirt, but I had to pick three. These are like the four products I would say that I'm working on now, and then because none of those I would say have reached product market fit, I also have kind of a fifth product, which is a consulting agency with General Magic, where we work with other projects that hopefully will receive product market fit. Just do dev work, design work, community building, whatever they need.
Great.
Yeah.
Okay. So we've got your on-chain creds established here. Let's talk about like when you have some of the, I don't think the DAO is exactly the best example, but maybe we talk about Giveth and Unicorn.
Yeah.
So what I'm talking about, what I'm trying to get to is like first
Unicorn.
users and the hustle that it takes to get the first 10 users, the first 20 users. Can you tell me about that? Like once Unicorn launched, what did you do to get people to use it?
Unicorn was really great. I think it's a good example because we did get 20,000 users, over 20,000 users, mostly via aligning with a client. Like one thing I've learned over the years, and really especially through building Giveth, is like it's so much easier to get PMF or find adoption when you're building for a client and building to solve someone else's problem. I know there's this classic, like, we solved our own problem, you know, and that was what like instigated me to start unicorn.eth. You know, with Giveth, the problem has always been like, my users get hacked. My users are not like educated in crypto. And even if they are, it's a very dangerous place. And so I built Unicorn to try to make it so that, to make crypto safe for people, scaled back, kind of a wallet experience that is really an account software that kind of protects the user from getting hacked, getting phished, like preventing all those things from the start, and also improving their user experience so that they don't have to see any pop-ups. Just Web3 works like Web2. They're just clicking and things work, you know, hiding gas, hiding chains, hiding 0x addresses. And those are things that I knew we needed at Giveth because I've seen nonprofits get hacked, get phished, get confused, send money to the wrong chain, but to the right address, or to the token address itself, you know, all those problems. And so with Unicorn, I wanted this software to fix those problems. And I was very lucky. It was a hackathon project, actually, in DevConnect 2023. And it won some awards. I hadn't done a hackathon in a long time, but I went back and had some success. ENS gave me some awards. And so then I actually proposed to ENS to build it with them because there's a lot of infrastructure that ENS needed to improve to make the product work. And so we partnered with them to make that happen. We became a service provider. So we got funding, which is also really important for PMF. You have to find a source of funding. And for us, we got lucky with ENS. But I kept trying to build it, and I didn't have anyone really to build for besides myself until I met up with ETH Denver. And then things became very easy because then I could get tested, and my theories, my questions, my thoughts got to get challenged by someone who had a real problem that they needed to solve. And so then we built for ETH Denver, and we had a lot of success. We took what was an 18-minute onboarding experience in 2024 and brought it down to 90 seconds, which is pretty incredible. And then also the onboarding for ETH Denver in 2024, only 23% were able to actually stake their spork and become a legal member of the Colorado Co-op. And they really need that because otherwise, if you're not a legal member of the co-op and they give you a free ticket, you can sue them. And they have like tort issues but because they had so much trouble onboarding people and they could only get 23% through, they really needed a better success rate. And we brought their success rate to 100%, actually. Everyone who needed to was able to stake their spork. And we just used the best of the tools today, you know, account abstraction, smart contract wallets, we deploy it for them. We pay for the gas, and it all just went smoothly. 90 seconds and 100% success rate.
Pretty sure it was someone from the Build Guild that built the previous staking app, and it definitely was like an app you had to connect a wallet to and understand custody and be a real like on-chain user to do it.
Yeah.
And generally, mainstream audiences are not those people. Yeah.
You have to get Matic to pay for gas, you know?
Right.
It's just like, how do you get that Matic, you know?
Yep.
And that's where most people get lost. And even if you have that Matic, you know, you try to get it to stake and there's like weird things. And it's nothing against Biddle Giddle. It's really account abstraction wasn't fully on.
Right. This is all apps on chain like this. Yep. Yeah, okay, so exactly. Nuggets of wisdom, really good here. We're here for the nuggets of wisdom. And it was like kind of work backwards from existing product market fit. Find someone that already has a problem that needs to get solved and solve just their problem. But by doing that, you may end up building something that a lot of other people can use too. Is that the nugget?
Exactly. Right. And so we put all our energy into focus on doing it for ETH Denver. And there became like an in-kind sponsorship, right? Like we get a booth at ETH Denver. So we have marketing. Marketing is so important. I can't tell you, like, you could build the best tools in the world, but if you don't have distribution, if you don't have a distribution solution, you're never going to get product market fit. People need to know about your product. It needs to be on the market. that's how
And this
it
is a
gets fit.
huge problem. This is a huge problem on the shoulder of every nerdy product builder there is. They think they can nerd their way out of the problem when really you need marketing and you need a BD and you need all the stuff that you hate to do. Don't do it. Have someone else do it. But maybe you got to do it yourself for a little bit, and it's going to be the most painful part of the whole product, but you have to do it. Like the time you spend in engineering needs to be matched by the time you spend in marketing and BD, right? Yeah.
100%.
Things I'm learning. I'm the guy who's usually quiet, always engineering. I'm learning these nuggets from PMFers.
Same. You know, it's so sad, but you need to have financial sustainability so that so you're not stressing all the time about that, right? I mean, thank God we got this huge support from ENS. That's what made Unicorn possible. Otherwise, it never would have existed. And then, we had a big problem to solve and solving problems for others is just way better than solving your own. I know there's a lot of people who are like, we solved our own problem, but honestly, it is not the best way to go. You need external validation. And usually most people get the external validation from investors, right? And that's how they get the external validation, they get investment, they kind of, bootstrap themselves for a little bit, but then they get external validation from investors and that solves their financial problem. And then they go, and that also getting investment means that you have a whole bunch of people that are aligned with your success. And that helps marketing, that helps support that, I wonder really how many bots are run by investors that are making fake on-chain activity for their products.
It's not zero.
I really wonder.
The number is not
it's
zero.
Not zero. It's not zero. Exactly. Is it 80%? Is it 20%? Somewhere in between there,
Okay, so let's talk about ideas. It seems like you've had a lot of ideas along the way. Where do these ideas come from? How do you go about finding ideas? Is it like a shower thought thing? Like, where do you get your ideas?
I mean, mostly from problems that we've seen, or we've always had. I've had a lot of products: Token Engineering Commons, Praise, Common Stack. The Giveth has been like 6 different products within Giveth. Some of them come from things that I've seen already have success, like quadratic funding, or our Give Power system is basically the VE curve model, but modified a little bit. Like VE curve, VE val, like this vote escrow voting system. And so, taking things that have worked, like I think VE curve, has seen product market fit.
Yep.
Now, I don't know that it's
gotta get him
really
on the show too.
best.
That's a good one.
Yeah, right. But like, it's been copied and it's provided value. So, taking things that work, quadratic funding, and you already had Kevin here, it's like, hey, this works. Let's bring it in. Don't be egotistical about like things that could fit in with your vision. But then, my ideas come from the goals that we have. And in the Giveth Galaxy, our goal is to build something better than governments. So like Pairwise pushes liquid democracy. This is not something we created. I mean, it's something we've implemented, but it's not an idea that we're like never heard of. We just made it up. It's something that, we can model after. And actually, Jordi Bellina, we're talking about product market fit and the DAO.
Shout out. Yeah.
Yeah, Jordi Bellina actually implemented liquid democracy for the DAO. And the day before the DAO was hacked, I interviewed him and took a bunch of notes about how he did it and what he was building. And I was going to write a blog post about it. And then, like,
no.
That blog post never got written. The next day, the DAO was hacked, and we had bigger things to do. So, but we built liquid democracy into Giveth, and we called it liquid pledging, and it was like a way that you could kind of delegate to someone to manage your donations for you and stuff like that. So, some of these ideas, like for liquid democracy and Pairwise, were ideas like this will just. I really think liquid democracy needs to be explored and experimented in. It's almost like applied research for a greater purpose, QAC is somewhat similar where, what we do with QAC is we launch bonding curves. I've been exploring bonding curves since 2018, well before Pump Fund and all this crazy stuff. We deployed the Token Engineering Commons and the augmented bonding curve through the Common Stack in 2020, 2021.
Back to the Simon DLR days, right? He was doing
exactly.
A lot of bonding curve stuff. Yeah.
Curation markets, baby. you
Maybe I
know,
should have him on too. We're getting some good
yeah,
names here.
and
Yep.
Bancor and Simon, they had like kind of this
Bancor. Yeah.
Isaac Newton like co-development of the same solution. I mean, I'll tell you, the bonding curves really solve a core problem, and they didn't find, they were invented in like 2015, 2014, like at the same time by both Simon and Bancor, but they didn't really see product market fit until 2022. Pump Fun and Friendtech, right? Friendtech, I think, first kind of brought it, found public, and the problem it solves is like accurate
Liquidity,
price
right?
discovery
Oh,
in low
price
liquidity, price
in low
discovery in
liquidity.
low liquidity
Okay. Yep.
environments. Yeah, because like if you have stock in a restaurant, for instance, but COVID happens, the price would go to zero. If no one wants to buy it, then the price goes to zero, and that's not accurate. If one person wants to sell, no one wants to buy, the price is zero. And that's just not true. And bonding curves solve that, because if one person wants to sell and no one wants to buy, person can send it to the bonding curve, it will be destroyed and collateral will be released. And same the other way. If one person wants to buy and no one wants to sell, the price goes to infinity, right? And that's not accurate. But with a bonding curve, they can send collateral to the bonding curve and it will be created for them on demand. And this is just a technological discovery, or very simple, it seems. But it kind of existed with ETFs.
Okay.
ETFs kind of have the same model where an issuer has the financial authority to issue the stock behind an ETF, like the silver ETF, which is managed by JP Morgan. They can, if there's an arbitrage opportunity and the price of silver in like physical silver is lower than the price of paper silver on the market, they can go buy physical silver, bring it to their vault, issue a paper certificate, and bring the market price down. And so that's like kind of the first real world application of bonding curves, you could say. But that's more like wrapped ether style of bonding curves, where which you could even say any kind of token wrapper is it's kind of like a bonding curve. Anyway, we're nerding out too much on technicals. So QAC, I wanted to kind of build a system that around bonding curves that's inspired from our work at Common Stack to solve the problem of launching low liquidity tokens for starting microeconomies that people could get investment and try to find product market fit and solve their financial problems, and like get external validation without having to do the VC route, being able to do public offerings, but also like reducing risk to consumers. And so QAC is designed around solving that problem. And I think it's close to product market fit because it really aligns. It solves a lot of problems for ecosystem grant programs, solves problems for teams, and solves problems for users. It's a little bit complicated of a system, and that always makes it hard to get product market fit. Complicated systems like Uniswap's a lot easier to get product market fit than like, what was it, Ether Delta?
Yeah.
Like centralized exchanges
still hard.
Get product market fit,
Yep. Way easier. Yep.
Way easier, because it's just like the user experience is simple, but what is happening, people understand. When systems get complicated.
Yep. And right now, like almost all blockchain systems are very complicated. Like any decentralized system is like complicated, and then it seems like layers of overcomplication because people were worried about regulation and they were trying to like get around it by making things complicated. So now things are like double complicated. Yeah. Totally. Okay. So ideas. A lot of your ideas come from a need of someone else. You do a lot of talking to a lot of people and understanding a lot of people's problems and searching for kind of like ideas that you might solve those problems with.
Yeah, and we have the Giveth Galaxy, as I like to call it, has like a very clear vision and mission, right? Which is like trying to build something better than governments. And so things are kind of always in that direction. Do we work on
government
a product
adjacent? Yeah,
solving public goods. People think the public goods space has like this weird thing where honestly, to me, it's the most revolutionary area of crypto, because the people who have product market fit for providing public goods are governments, right?
But also, there's a lot of people BSing in the public goods space, and there's a lot of, like, public goods has been, like, I would say, like, 7 out of the 10 people I meet that say the word public goods to me are more fluffing me than they are actually ending up going to have any impact. So I see where there is some kind of ecosystem flack going toward the public goods people, but you're right.
Totally.
We learn to solve these things. We're not solving them for this little crypto ecosystem. We're solving them for a mainstream audience eventually.
If we solve
a giant government,
if we can actually provide an economic system that solves for non-excludable goods, public goods, and common pool resources, we don't need governments. If we can create a free market solution for public goods, that will be better than governments. Right now, though, it's impossible to get. You have to be financially successful, basically, economically sustainable in the public goods space, which is, very difficult, to provide value for free, basically, in a non-excludable way and make money at the same time. It's really just blockchains have succeeded. Ethereum, Bitcoin, in my opinion, they provide public goods, and governments. And actually, what's funny is they all have the same economic model. Governments, Bitcoin, Ethereum, they issue a token, right? They issue a currency. Most governments issue a currency, and then they fund public goods either by creating demand for that currency. In Bitcoin, it's transaction fees. In Ethereum, it's transaction fees and staking, and using it as a unit of account throughout the ecosystem, right? Same with Bitcoin as a unit of account in the crypto world, basically, with being traded against these things. And so they create demand for that currency. In governments, it's taxes, creates demand for the currency. And of course, kind of requiring that every business accept it as legal tender. And then they can issue that currency to provide public goods, or they can collect those fees to provide public goods. So and both Bitcoin, Ethereum, and governments, and as well as governments, they all do the same thing. They issue currency and they create demand for that currency, and that's how they provide public goods. And so that's always been my theory of how we could solve this problem. And I'm excited about bonding curves to solve it in a low liquidity environment, where it can be more of a free market solution, competitive markets to provide public.
Okay, so my next question is, how do you validate these ideas? Like, how do you know if they're working, or how do you know if they're good, or what do you do to, okay, we've got Unicorn, it's solving this problem for this person, but how are we sure that we should keep working on this, basically?
People have to pay you to do it. I know it sounds crazy, but you have to have a revenue stream and create some sort of validation opportunity. It's really easy in some ways to get investment, much easier to get investment than it is to get revenue, especially in crypto. So you got to find a revenue stream that would validate your actual business offering, are you really creating value for people? Airdrops have great product market fit, but it's only because they have investors. It's not really product market fit. Unfortunately, I wish. I think the cost per user acquisition there is just a cost. It's not revenue. So, you have to have some way of getting external validation. And in crypto, it's hard because honestly, there's so many grants, there's so many ways of getting external validation that actually is a lie or it's a bad signal. But there's nothing better than, real users using your product and paying to use your product. Uniswap, people pay fees to trade. Centralized exchanges, Polymarket, all these Aave, all of these on-chain tools, people are paying to use. That's how you've done it. People have to sacrifice a little bit for your solution, and then
So on the other side of that, when do you know that it's time to scrap the idea? Like, when do you give up on the idea? And maybe give me an example of an idea that maybe you stuck with a little bit too long and you wish you would have scrapped earlier, and what that feeling
Every
is.
single one. Every single idea I've stuck it through the end and just been blowing my own cash to keep it alive, honestly. So like, yeah, I mean, some that have died, praise. I love praise, man. It is a really beautiful system where basically it's kind of like, we kind of made it like tipping in a way, but without the quantification. So it's like, I praise Austin, you know, go in Discord or at the beginning of a call, and we still use it a little bit, but and I'm like, I praise Austin for bringing me on the PMFers. It was so great talking with him, and I know it's going to have a lot of reach, and it was really validating to do it, right? And so we found product market fit in that aspect of it. This just feel goods, like community building side. But then the way the sausage is made is that, you know, every 2 weeks you're supposed to kind of quantify that qualitative assessment of praise, and we couldn't find product market fit on that side. You know, so people would use the praise protocol and they would add it to their Discord, dish praise to each other, and you know, I found a couple of co-founders to try it, to go hard, push it, and then it just never got adoption past the first like month or two. It would just keep falling off and keep falling off. And eventually, you know, what made it die was budget constraints. And not even really budget constraints, because it always did well in grant programs. It got bad signal for funding in various
false
programs.
Positive signal. Yeah.
External validation went from, you know, communities, because honestly, like the first adoption, it's such a great reward system for, you know, trying to add qualitative feedback and quantify it. And it's like, it has like this like initial attractiveness, but then it always falls off. And eventually we just had to stop asking for grants, because we kept getting grants and we kept building on it and kept not seeing adoption, kept seeing like people try it and then stop, try it and stop. And eventually we just had to stop. We just had to recognize that whatever we're doing now, like I feel like actually if we would have kept building on it, now that AI is here, you know, that could have done the quantification and assessment, which was where it would fall off. And we probably could like restart it or something with AI as the quantifier. But we just had to stop it. And, you know, I put it in a couple people's hands and basically gave them a budget. And even though the budget kept going because we kept getting grants, we just had to make the call to like prioritize other better opportunities. And yeah, and that was really a lesson that I've learned, is just like, we got to be building for clients, and we keep losing our clients. So we have to stop. This isn't going to work.
So not just like getting funding, like you can get funding for something that has impact but isn't useful. And if the ecosystem keeps giving you funding, you may think you have like this fake product market fit, but you don't. And we'll see grants programs start to get more particular about this too, and start to figure out like, sure, you're having impact, but like if you were charging for this product, would people actually be using it? I think that's a good like rubric to apply here. And if it's a no, then maybe they shouldn't even get a grant, right? That's maybe how it should work.
I mean, it's really tough because, you know, there's like the startup model, right? The startup model is actually really brings innovation. You know, I think it's important to have experiments and fail fast, and that's the tough part. You know, what shouldn't be happening is a project that's been around for 3 years and keeps getting grants and stuff. Giveth, I'm so sorry. You know,
your own, you're shitting on your own.
I mean,
dang,
well, the
man.
thing is, Giveth has not. I mean, we get funding, and but we apply for grants and we get the grants, and you know, we add the chains, and sometimes they have product market fit and sometimes they don't. But the thing is, Giveth is a nonprofit. It's kind of a different game. You know, it's not a business.
Like going straight for that revenue as a hard metric. There's different. It's softer with a nonprofit.
I mean, we're funding the Palestinian children that are refugees from Gaza, and we're funding like open source development and all sorts of really important stuff that don't have business models, require donations, and we're doing it from a place where we don't charge them any fees, and so we're effectively a nonprofit too. And it's a different game. We keep doing we don't have product market fit, but it's hard to have product market fit as a nonprofit because you're straight up taking out the signal.
And it might sound soft and nice to be a nonprofit, but what we're learning here is you should be for profit and you should charge your friends and you should make revenue right away. And if you're not, you should keep iterating.
Yes, exactly. And what's funny is like, for me, I've always had this feeling. I run a donation platform and I don't believe in donations. I just don't, but that's where that you also have to meet people where they are, right? I want to make it so nonprofits can launch their own tokens and build an economy around the value they create. I've kind of lost faith that they can launch their own token directly because like launching a token in 2025, I don't think it's the same game as it was in 2017, 2018. I think if a nonprofit had a little bit of an entrepreneurial spirit, they could actually succeed then. And I just don't think they can today. Maybe one day the world will kind of evolve in a place where that could work, where people can believe in small market cap tokens like that. So I'm pivoting already on that, but that's why we built Giveth, and we wanted to bring nonprofits in and eventually replace their donations with a token so that they can get market feedback and provide public goods. And this is my perspective and what I've been building towards ever since the DAO and even before the DAO. How do we solve problems of public goods, but make it so that it's in a competitive market where they have upside, where they have the same tech startup mentality that can bring innovation. This is the problem with the nonprofit space is there's no way to actually breed
check
innovation.
The market. Yeah.
Yeah. Like what I like about the tech startup scene is that you can, as an investor, you can fund 100 projects and watch 90 of them fail, 95 of them fail, and still be profitable. And that means that you can have 100 experiments and only 5 or less, even 2, have to work for it to be worth it. That means you have 100 shots on goals for changing the world, And in the nonprofit space, it doesn't work like that. You have no one's going to make a profit. There's no competitive signal. There's no there isn't the appetite for risk in innovation. It's like, let's just give homeless people blankets. Where's there's this really great project on Giveth that's called the Homeless Entrepreneur. And he actually goes out and tries to help homeless people build their own businesses, right?
That's great.
Incredible work. Something I really want to support, or it's aligned with my vision of how things could be better. And he has a tough time getting funding because he's taken some risks, He has to throw all these stunts to get attention and to get funding for his project. He spends more time fundraising than building because no one can get upside in the opportunities that he's creating, or the upside is really small. Like, okay, you become a investor in some homeless guys whittling projects, it's not going to make that much money.
But this is okay. So we're talking about accelerating apps, and this is something that I think the ecosystem is really hovering around right now. It's like an Ethereum accelerator or like an accelerator of accelerators. What do we need to do as an ecosystem to correctly nurture the app layer to see a ton of apps getting accelerated? What do you think needs to happen there?
I mean, I think it's going to happen naturally because building in this space is now so easy, and we actually have good user experience tooling, and we have good on-ramps and off-ramps like never before. I mean, it's still not perfect. Things can improve, but I think the core thing has to be giving grants to new teams not grants, sorry, investments.
Right, not grants. Like
not grants.
money that has strings attached, that you're putting your money where your mouth is, and I'm putting my money where my mouth is, and we're willing to make the bet. Like, it needs to be that, not these, because you were just talking about how grants can be farmed, grants can be false positives. Like, real money on the line has to be like part of this acceleration.
There's got to be alignment of incentives. When you're a startup founder and you have 100% of the stock, and then, or founder set, and then you get some money from investors and they have 10% and you have 90% upside, you're not trying to do the bare minimum to achieve the milestones that the grant gave you. Like, that's the incentives for grants. It doesn't work.
You are obsessed, and you're hustling every day to turn that 90% into generational wealth.
Exactly.
Yeah.
Because you have real upside, and it's worth the sacrifices, the short-term sacrifices of, having challenging relationships with your family and partner for a year or two, right? Like, I just went, and also education of what it takes to be, like in a startup and get investment and manage investor desires and what they actually want. I just went through the Orange DAO accelerator program with unicorn.eth. Man, was it eye-opening. Oh my God. Like, I learned so much.
Yeah.
Don Ho, Burke,
he's a man. Yeah.
Ben, dude, these guys, they helped me so much. And because it's a different world, satisfying the needs of investors, turning really hustling for growth and how important growth is, and seeing a fail fast attitude, hustle, get clients, talk to your clients. You wouldn't believe how often they're like, how many clients did you call this week? And it was like milestones. How many conversations did you have with potential clients? Like, how many did you sign up for your platform? Why did they say yes? Why did they say no? Like, figure it out. What is your traction? What's your growth metrics? It was just like things that, I get really product focused by default. I want the product to look nice. And they're like, the product doesn't, who cares what the product is today? You don't have any users. Like, go talk to users, figure out what your product should be, satisfy their problems. And also really getting concise with your explanations and making it so that you we spent so much time on a one-liner. What is your one-liner? What is Unicorn, right? Unicorn is no code dApp store infrastructure for any brand. I had no idea that's what it was, but that's effectively what it is. We provide a safe and secure environment like the Apple App Store did, and we allow, people to come in and use curated applications in a very safe, secure way where they're not going to get scammed. And that's, how long it took us to get to that point where we could make that analogy. And it also has this really nice upside of, an app store. There's lots of there's positive intention or opportunity there, right? And so, whereas we were always we're a community building tool for onboarding to ecosystems, which it also is, but it's not as sexy. It's
right.
And so
I was like, that's not good enough. Give me more.
Exactly. You know? And
it seems like these accelerators give you an insight into how serious people are actually doing things. And you think you have a good product until you get next to a serious person and you realize you are not a serious person and you have a lot of growth to get to be a serious person. Is that maybe an experience you had in that accelerator?
Yeah, I mean, and also just what does it take to succeed in these circles,
this arena? Yeah.
I mean, honestly, to do things with blockchain, it's expensive, man. To get a really good CTO, they have a lot of opportunities. These 10x engineers, they're not cheap, and to do, I mean, things are a lot easier this year because of Replit and V0 and Lovable and all the cool tooling that you can do for prototyping. It can really shorten the dev cycle and the development cycle, the product cycle. You don't need to write a product spec anymore. Just open up.
You write the product. The prompt is the product spec, basically. Like you still need to write a product spec. Like I find myself when I'm about to write a piece of software, going to my notepad first, and I write the piece of software in the notepad, and then I copy paste that into Claude, and it one shots it.
Yeah, exactly.
So that's the next question is AI. So when you're talking about a 10x engineer, it's more like a 100x engineer now with all this AI and all this tooling. How are you using AI? Like, what's your day to day in terms of AI usage?
Well, I'm just like a fucking phone. Sorry for swearing. I'm just a phone call jockey. Like I just talk to people and work with other product engineers and product people.
So you're one abstracted from the big AI usage, probably.
I mean, I definitely play with V0. I love it and Replit. And I think they're just such cool tools. I write and edit proposals and make product specs, but like I work with product engineers and I push them so hard. We actually did in the Giveth Galaxy, we did like a 2 month long AI build-a-thon, and we've had a couple AI hackathons before this, but this last one, everyone had to build an AI agent. Our accountants, our admins, everyone had to build an AI agent that in a team of 2. So and a dev couldn't pair up with another dev. They had to team up with an accountant or something.
And those non-dev people had amazing ideas, I bet. That's why this accessibility that everyone, like, you do not have to be a coder to make a product anymore. And that means that like way more people are going to have access to making products to the point where like possibly you're prompting the software to even create the UI like live because you need something, right? Like when we think of the burger menu in a UI, like I got to go here to go get the rest of the stuff. There's going to be a button that's like, I need a button that does this. And then the button shows up and you click it. Like it's going to be crazy. Yeah. Yeah.
It really is evolving that way. I think right now you still need that 10x engineer to make it production ready. You can
and safe.
Yeah, exactly. Especially with crypto, it's just a little too sketch to go all the way to production with anything where you're connecting a wallet, but without review. I mean, but then you just have the engineers like go through it. The thing where it really succeeds in product development now is taking the beginning part and making it like probably at least half as long. I say you don't need a product spec. Of course you need a product spec, but it's a lot easier to communicate to a developer what you need when you give them most of the code base and a very well functioning front end that has the actions that you need.
You get to feel how it works just by clicking the buttons. Yep.
And so, if instead of a product manager making a product spec, they make a prototype with V0, Lovable, or Replit, or any of these other similar products. And then they, and you could do it with Claude as well, or Windsurf, but for non-developers or even like less developed product-focused people, I think it's better those other tools. And then you make it so that, what colors, you throw it to a designer, and then he makes the UX a little bit better, ideally by prompting and vibe designing, you could say.
Yeah.
And then you send the code base to the developers. They vibe code most of the problems, and then they come through and they actually have to review the code base. There's a lot of edge cases and problems when we've tried to make real products. It doesn't get you all the way there. Especially on the back end right now. I think the back end is like the back end code.
You mean like an API, or you mean like the blockchain? What do you mean by the back end?
Yeah, the database.
Okay. Back end, traditional back end, not
traditional back end.
Okay.
Yeah, the blockchain too, like smart contracts. I mean, first off, we just try to use smart contracts off the shelf anyway. Try not to, when we're actually deploying on chain, like we're in the public good space, man. I don't have the money for audits. Like it's bad enough that we go without audits to kind of piece together other people's software. With QAC, it's so complicated that we just have an external team, inverter network. They're amazing. Cool. They manage all of that tooling, and they can fund audits because they're building this infrastructure for lots of people. For Unicorn, we outsourced to ThirdWeb for tooling and wallet systems. But for Giveth, we piece together other smart contracts that are very well secured, and we don't do too many complicated things. Or if we do, like for DVouch, which is another product that's part of Giveth, it's just attestations on chain. There's no financial risk really. So there's there's times when you need to have really high security, and smart contract development generally needs audits. And I'm not going to audit we can audit with an AI, but I still want a real human.
It's not ready yet. Yep. But in a couple of years it will be. Yeah.
Probably 6 months.
Probably 6 months. Yep. Okay. So we're kind of toward the end. I've got some existential, interesting questions here. What do you wish you knew before you got in? As a product founder, or thinking of a product founder coming in now, what are some of the lessons along the way that just like you wish you would have known up front?
I kind of said them already and peppered them through this.
Yep.
Don't build for yourself. Get external validation. Get investment. Don't spend your own money. Maybe this is more of an entrepreneur thing, than like a product thing. But, get investment, create revenue streams, and build for clients. I think building for external clients is really the most important thing that I've learned over the years. I feel like also having, I love DAOs. I really do. I love the dream of a DAO. But in reality, it's really important to move fast and be agile and have clear responsibilities. I love what Coinbase has. I think Brian Armstrong made a blog post about how they make decisions in Coinbase. And I really align with it, where it's like there needs to be a clear decider, and it shouldn't be voting or something like that. That's dumb. I think voting is important, of course, and there are like places for it. But in development of a product, you need to have clear decision-making processes where there is one person who's responsible for making decisions. I totally align with advice process and like collective feedback, 360-degree feedback on people's on products and people and this sort of thing. But don't build what you think the world needs. Build what the world asks for.
Interesting. Okay.
And the only way to know what the world is asking for is to talk to people. You don't have to do what they say, but you need to solve their problems, not problems you think they have. And you need to validate your solutions that they actually solve their problems, and don't create others, because that's really the problem with most of my products. It's like, yeah, they solved your problem. Look. And then it's like, yeah, but I can't even use it. This crypto stuff is too hard.
I just lost all my crypto. Yeah.
Yeah. Oh, totally. I can't tell you how heartbreaking it is to see nonprofits send money into the void, man.
Yep. So kind of, I think we already answered this one also, but a couple of years ago, it felt very much like building an on-chain app and getting product market fit was for a very few cracked elite Solidity devs paired up with an elite product dev. Do you think that that's still the case, that like building a good app on chain still requires like the 1% of product people and the 1% of developers, or has it become more accessible?
It's way more accessible. I think with AI here, I really do advise people to get investment and try to get at least angel investment early to like remove some of the financial strain and never invest in your own companies. You need that external validation. But and then because that's a great way to fail fast until you find something that you can get that external validation for, and then you're building your own wealth and anyway. So like, but I think actually soon we're gonna not need some. There's Kevin Seagraves, right?
Mm-hmm. Yeah.
I was talking with him in ETH Denver, and he was saying that he is a one-person team. He's building dinner.com. It's like, it's not really a crypto thing. It's like an AI matchmaking for like making friends, finding partners, or like making couples as friends. And it's just like, go out to dinner with someone, you know, like, and you can answer a questionnaire, and an AI matchmaker kind of like finds another couple for you to go out with your wife for dinner on Thursday, right? And picks the restaurant, does this whole thing. And, you know, there's other apps that do that sort of thing that he's modeling after. And, but he's a one-man team. He can afford to just, you know, not get so much investment, have all the upside, and make just a little bit of revenue, right, to sustain himself.
And I remember him with an idea. So I don't know if I was the one that really got him there, but he came and was like, how do I build on chain? And we went through like speedrun Ethereum, and I showed him all the stuff. And by the Dex challenge, he was like, okay, I'm ready to build something. He went and built something and had a prototype. And by the time he had the prototype, the VCs, everyone was just like, no, you need to go raise now. Like, you have everything you need. Like, you don't even need the product. You need to go raise and get that validation and then come back and finish the product. And I'll bet you that now he would say, don't do that. Make a product, get people to pay for it, and that's your validation. And that's kind of what's changed in the ecosystem, I think, in the last couple of years.
100%. You know, before it was, you could be pre-product and you just have a good token model and a good team, and like you'll eventually get the investment, and the network can meme your token into existence, and effectively that's your product market fit. That's your first product, is the token.
Mm-hmm.
And then you build the real product later. And for investors, it was a great deal because they could exit. That's no longer the ecosystem, at least the Ethereum ecosystem in 2025. And so now, when at least going through Orange DAO now, you know, like they're talking about how you actually need to get clients, get revenue, satisfy their needs, you know, talk to clients, get 10 clients that love you, and then investment just naturally will come.
And it's like, it's obvious when you say it, but if you're sitting there in the dark building a product going, why aren't people using it? It's like, there's all this obvious blocking and tackling that you're not doing. And sometimes an accelerator is just like, it's time to get out there and get boots on the ground and find out. Yeah.
And, you know, it's just a change of the times. You know, that we were spoiled in crypto when everything was going up, and bull markets, 4-year cycles were guaranteed. And, you know, it's just like, you just had to be recognized.
That didn't happen.
It didn't happen that's why things are changing.
Yeah.
I mean, hopefully there's this, we're in the super cycle now. Hopefully. But like, I
hope so.
I mean, I'll tell you, man, the biggest mistake I ever made was not raising for Giveth in 2021. I launched
because it was hot. You're saying like that was the time to do it? Like, why?
I know,
what is it?
I know products that were really not much better than a spreadsheet that raised $5 million and a $50 million evaluation. My credibility was much higher at the time, just because it was closer to the DAO days. I was, you know, more connected, and I was going to launch a token for Giveth, and I wanted to, but I wanted to have like the highest integrity possible. I didn't want to have VCs or investors. I wanted to do a really fair airdrop and build an economy around the value that Giveth can produce. But I'll be honest, the network that VCs can bring you, and in the timing of the market,
with the cycle and all of that. Yeah.
When right now with Ether, you know, sub 2000, the investors are like, hey, do I want to invest in your startup?
Or just buy ETH.
Or just buy ETH, you know?
Yeah.
And it's hard to compete. When ETH is, you know, 3 times its previous all-time high, people are like, you know, I should really get rid of this ETH. Maybe I will throw it into some startups. And so, you know, in 2021, legitimate blockchain builders, there was a supply and demand. And I'm a legitimate blockchain builder, you know, with good reputation, high integrity. I could have raised $10 million, and Giveth would be a better product for it, unfortunately, you know, because it wouldn't be scrambling for grants and doing all these weird things to do what it needs to do to launch what it needs to launch. Like, Giveth is doing QAC, and we're launching bonding curves for Polygon, and we're hopefully going to launch bonding curves for other L2s, but we can't launch bonding curves for Giveth because we don't have the money. we have to get external support and solve their problems, and then maybe hopefully I'll be able to bring that software into Giveth, and like, it'll be subsidized by the external support, and I have to play all those games to survive and build in this space. Whereas if I would have raised in 2021, man, it was just a timing.
Yeah.
And back then it made sense, and I'm sure a lot of people who invested in 2021 made a lot of money despite it not really making sense.
Yikes. Okay,
so, yeah.
last weird one, and then we'll close out. I think we're past the hour already. Sorry I've taken so much time. Weird one is, what is your superpower, Griff Green? What is your superpower?
My superpower is trust. I trust people that I work with. I delegate to them, and I give them full authority. And when I disagree, I give them feedback. I disagree, but even though I should have the authority to win, I trust them. They're on the ground. I trust the people on the ground to make the right decisions, and that allows me to delegate really well and have 4 products and a consulting organization. Right? I think delegating trust, or being able to trust people to do their best and create an environment where they can is probably, I think that's my superpower. Yeah.
Great. So many good nuggets here. I hope the PMFers out there listen up and take some good advice here. Griff, your superpower is delegating, and that makes a lot of sense. You trust folks to just get things done. That's a great superpower. Thank you so much for coming on PMFers. I'll see you at the next conference, probably.
Thanks, Austin. Good to see you, man.